sure that 2025 ends better than 2024 ended. So we got to make better decisions, and we need to know how. And in order to do that, somebody's got to give us some more information that gives us something other than what we've already known. He said, "You need a few robots in your house." Damn right I do. One for the dog. Well, if I don't get a few robots, because robots are like $150,000 a piece, to get me a bot to help me out around the house, and for a good $15,000 a year, I could get two Asian women to do it. So I don't know why I get two bots when I could just go to Asia and get two Asians. And for that price, for what, 750, $800 a person, they would be doing whatever I need them to do 30 days out of the month. And it'd be far less conflictual than having a Western woman in the house taking up all the money and not doing anything. And I still got to go hire help from Mexico to take care of the stuff that the woman in America don't want to do. Want to be a DJ? I could have a DJ on the thing. The moon is a gigantic Death Star made of cookie dough. Now, that's what happens when you smoke too much meth. Cookies in the stove, transport to the moon and back to the cookie. That's mushrooms right there. So let's go ahead and move on some factual information. So start talking about some factual information. The Federal Reserve sent a new and frankly confusing signal on interest rates recently, and that's something that we're going to be covering today because that affects our ability to invest in certain stocks. Oh, real quick, the meme stock, we just sold that today. We had a huge gain on it. It went up, I want to say 17% or 18% for the day, and then we sold on it. The ex dividend date was today. So tomorrow we're going to be buying into Schwab US ETF. We're going to be picking that one up tomorrow so that we have it by the 10th because the ex dividend date is on the 10th, which is the same day as the record date. So if we're on the books by the end of business day on the 9th, we will have it for the 10th and we will be included in the dividends that we're supposed to receive from Schwab, which is 2 days from now. So today being Tuesday, you buy Schwab in the morning, which is SCHX. Buy that one in the morning and then hold it until uh, Wednesday, because tomorrow's Tuesday. And then we hold it until Wednesday, the 10th. We sell it Wednesday, the 10th. And then we'll be looking into buying some stocks come Monday or buying the stock before Monday, because if we sell it on Wednesday, it should clear by Thursday, where we should be able to buy a stock either on Thursday or Friday of this week for next week. So stay tuned to that for anybody who's following us on our dividend rotation strategy. Now, the stock market, after a very strong year, has gotten rattled and choppy. So I want you guys to understand that. Special shout out to Michael. He jumped in uh, better late than never. He thought he was on time. I'd have been here 20 minutes. Now, a series of massive tax law changes are looming just over the horizon, set to take effect at the end of next year. Now, on their own, each of these is just another headline that you might scroll past and not pay any attention to. But put together, they're creating the perfect storm that will directly impact your savings, your 401k, and how much you're going to owe in taxes at the end of each year. So this isn't a theoretical scenario, the way Dylan was talking about the moon being made of a Death Star that's made of cookie dough. This is actually happening. And it isn't years away. These are shifts that are happening right now. And in tonight's show, I'm going to break down exactly what these changes mean for your wallet as a ability to invest for you guys. You can also go and talk to your certified financial planners if you like, get you a CPA and have them verify it. But I'm going to pull back the curtain and I'm going to give you guys simple, clear checklist of what you need to do to prepare. He said, "What savings?" Well, I mean, you put all your money into estate sales, Michael, so you don't really have much left over when your assets haven't sold. But oh, true. Well, no, if they weren't broke, they're broke now because a lot of people wasted a bunch of money on Christmas presents for Christmas. I had a guy tell me that he had like 12 or 15 family members that he had to go buy Christmas presents for. And I told him, you could take a screenshot of a Christmas note on a construction paper, which costs like a couple pennies, and let them know it's the thought that counts. I'm thinking about you. Merry Christmas. And just send that to everybody you know, right? Save some money. Matter of fact, you can give them a gift that keeps on giving. Give them some investment ideas where they, instead of just giving you money, they could take that money and put it into a stock option that makes them regular payments instead of just buying an expensive gift that's probably going to collect dust and not ever be utilized, which I think would be a better gift to them than them buying something for me. Now, I'm not going to turn away something that they bought for me, but I am going to tell you at the same time, if they asked me what I wanted, my response would be for you to be financially stable. So don't waste money on getting me stuff that I am probably not going to use. But if you want to get me something that you think that I really need, I can use a full set of brand new tires on the car right now. That'll help, and the transmission needs to be redone. So full set of tires plus the spare. That's five tires, upward of a $1,500, and then the transmission's another $3,000. If that's what you want to do, I'm not gonna tell you no. But as a thank you, all the money I would have spent on that, I'm now going to put into a high interest stock because I'm not buying gifts for 20 something people talking about some. I just wanted to show y'all that I care. Bitch, I'm breathing. If I called your ass, I care. That's it. Said the average American only has only able $500. Well, they have less than $1,000 in their accounts on most Americans on average. Um, they said about a TV today for $100. Whoo, that's an expensive ass TV. One present under $20. I ain't getting them shit. You're spending $20 more than what I would have spent. Call me Scrooge if you want to, but when you think about how much money you spending on presents, and then you think about how disappointed you are when those same people couldn't afford to buy you nothing, and then you think about the fact those who did buy you something bought you something you didn't want, and now you're gonna spend all this extra money in line at Walmart trying to return the gift to the stove to get the money off of it so that you can buy the stuff that you need. You could have just not bought nobody nothing and just bought the stuff that you needed, and at best made you an extra plate of food and brought it over to their house for the potluck Christmas dinner and just ate with them and spent some time with them and just let them know that they was valuable and just stop wasting all your money on bullshit. That's technically what you could have done. He said, cheap. You're damn right. You're damn right, because your standard of living should be 30% of your income. And if you are living at more than 30% of your income, you are wasting too much money, which means you don't got money for gifts. When you start living at 30% of your income, then you've got plenty of money to take 5 or 10% and start wasting it on bullshit. Where's the show bunnies at? Well, until we find some, first of all, we don't have show bunnies. We can find some that don't mind bouncing around on the stage, but at the end of the day, that's not what this podcast is about. He said I sold it on Facebook for $150. So you made a $50 profit. Good job for you. That's what I'm talking about. All right, let's get started with the biggest domino of all of the changes that we've had happen so far this year, the Federal Reserve. You can think of the Feds as the economy's main control room. Now, their job is to keep inflation in check without crashing the job market. So, for the better part of 2 years, their mission was single minded: raise interest rates to fight off the worst inflation we'd seen in 40 years, right? Uh, that was the painful but simple part of the story. Now, things have gotten complicated. After a long series of aggressive hikes, the Fed has shifted its stance. They delivered quarter point interest rate cuts in both September and October of this year, which is 2025, which brought their main policy rate, the federal fund rate, down into the range of 3.75 to 4%. This was a clear signal that the war on inflation was entering a new phase. So the market celebrated, seeing it as the all clear sign. But here's where the confusion begins. The Fed's next meeting is scheduled to conclude on December 10th, in 2 days. And for a while, Wall Street was acting like another quarter point cut was an early Christmas present already under the tree. However, the reality is for far, far more complex. Because if you look at the Fed's voting committee, not everyone is on the same page. The vote in October showed a noticeable split, with some officials waiting or wanting a bigger cut and others wanting no cut at all. And some are pointing to a softening job market and arguing for another cut to make sure the economy doesn't stall. Others are looking at inflation that is still stubbornly over their 2% target and are urging caution, urging that uh, new argument of cutting rates again would be very premature. Dylan says, but then spent the 50th page to trim my tree. But that's maintenance on the house. That's still good. Uh, is there in good in this? Well, knowing what's going on is good in this. Yes. Being prepared for the upcoming changes is good about this. Yes. And then recognizing um, what changes that are about to come allows you to make certain pivots before it actually happens. The old saying, had I known, I would have done this differently. If you have the capabilities of foresight, you could predict the upcoming outcome, which gives you the capability to make alterations to your current course of actions so that you are not negatively impacted by the foreseen catastrophic activities. In fact, Fed Chair Jerome Powell himself has stressed that their decisions are data dependent, signaling that a December cut is anything but a guarantee. Uh, this isn't the unified, clear cut, uh, the Feds that we have seen during the hiking cycles in the past. So, this is a central bank at a crossroads, wrestling with conflicting data and no easy answer. Just a few weeks ago, the market was pricing in a near certainty of a cut. And now, while many still expect one, there's a real and growing chance they might just pause. This decision, whichever way it goes, is the stone being thrown into the financial pond. And the first ripple is the one that hits your cash. But we'll get to that in a minute, because for most people in 2025, investing has felt pretty good, at least if you guys were following me. As of early of December, the S&P 500 is up for the year, showing a total return of around 17.8%. And most of those gains were packed into a strong run from the spring through the early fall. He says, the more knowledge you collect, the more foresight you will have. Yes, that is true. Now, recently, the mood has shifted. November was mostly flat. We understand we were coming back off of the shutdown, and with the S&P 500 moving up less than 0.5% during that time, the market has been choppy ever since. Now, we've even seen days where good news on the economy causes stocks to fall. A weird phenomenon that leaves a lot of investors scratching their heads. So, what's going on? The market is going through a big psychological shift. For the past year, the story was simple: inflation is falling, so the Feds will stop hiking. and eventually they'll cut rates. Hooray! And that was the fuel for the rally. Now, the market is having a reality check. It's moving past the simple rate cuts are good scenario and starting to ask tougher questions. Questions like, why is the Fed cutting rates? Is it because inflation is perfectly under control and the economy is strong, which is the famous soft landing approach? Or is it because they see weakness ahead and they're cutting rates to prevent a recession, right? The rubber you collect, the richer you'll be. I don't know about that because you can collect a lot of rubber, but if you don't utilize it for something, you're not going to be rich. You'll just have a lot of rubber lying around, like a rubber band ball. It's a flat like a woman's chest, where neither one of those can turn you a profit. My finger is bored. That's because I blocked the guy from last week when he jumped in with the foolishness. I've been wearing out the block button. I don't know where you been. I've been wearing out the block button all week. I have folks coming in here with inappropriate comments. I mean, this is a highly interactive podcast, and ladies and gentlemen, y'all can comment appropriately, whether you're on Twitter, Twitch, or YouTube, whether it's YouTube vertical or YouTube long form. And the ideology is that it is supposed to be appropriately structured comment in a positive fashion, whether you agree or disagree with the topic at hand or my observations. We can have a reasonable debate, but negative comments and hate speech and anything excessively derogatory would potentially lead you into a position of not being on the show anymore. Because the YouTube community guidelines, as flexible as they might be in their vagueness, is still extremely strict. So if too many comments come up on the screen, too many comments come into the comment section that I don't do anything about, then I have to deal with them. And before that happens, before my channel loses its status, I will make sure that every negative comment is blocked by blocking the person that made the negative comment. It's kind of how it is. So my admin, Michael, he's supposed to see it like, that's a little too much, and then just hit the button and maybe give them a timeout or, something like that. They do it too many times. You maybe want to ban them, something like that. But, you know, I haven't seen anybody disappear. So I just started making people disappear. That makes that fixes the problem. So now your finger's itching because you didn't push the button when you should have pushed the button. I don't know what to say about that. That's why I'm saying I'm bored at work because I haven't been working. Start finding something to do. I ain't mad at you, but just like that day when the guy was spamming the comments so much that we couldn't even get the story across last week Wednesday. That's the guy that jumped in today, and I was just like, block. Second comment he made, I blocked him. Did the government print $3 trillion during COVID pandemic and cause the biggest inflation increase in the United States history? I don't know anything about that, so I can't answer that question. Inflation is caused by the tariffs. Inflation would have been caused by high prices. But during the pandemic, when nobody was going to work, nobody was spending money, and the government was trying to do a lot of debt relief to prevent people from losing their homes and everything, I don't believe that that was the case. A lot of stimulus checks went out during COVID, but I don't believe that the government caused a large quantity of inflation. I believe that the tariffs that were utilized by Donald Trump to bring down that $300 trillion deficit that we had down to $30 trillion is what contributed to the increase in inflation. Just thinking. He said, "Where's my dog?" Over there laying down. He's behaving, which is good for me because he'll be up here trying to co-host the show. Let him take a siesta. Now, the uncertainty of what's happening with the Feds is the source of all of the volatility that we're currently seeing in the stock market. The market isn't just celebrating the end of rate hikes anymore. It's now trying to figure out the piece of future economic growth and the actual path of Fed policies going into 2026, which is typically what we do. We start figuring out what's going to happen next year, since next year is 2 or 3 weeks away, and that's going to negatively impact us for another 12 months. So we kind of want to know what we're walking into. You got to clear the room before you walk into the room, right? That's a much harder equation to solve, and it's why the market feels so confused. But while the stock market works through its identity crisis, another part of the investment world has quietly become much more interesting: the bonds. For 2 straight years in 2022 and 2023, rising interest rates just crushed bonds prices. And it was a historically painful time for what's supposed to be the safe part of your portfolio. Now that pain is over. He says, got a question. Since the Federal Reserve is a private company, how do they benefit from all of this? Um, that's an interesting question. They decide what the interest rates are, and that decision impacts how you spend money. Typically, since they control the interest rates, they would invest in companies that would benefit from interest rates. So when they make interest rates decisions, they would ideally impact their revenue if they're investing in interest rates. Mortgages, car loans, impacted by the interest rates from the Federal Reserve. Small business loans, large business loans. So, I mean, if you decide how your employees come to work every day, you control the payroll. And if you control the payroll, you can control how much you're going to spend versus how much you're not going to spend. You wonder why some restaurants have a harder night shift than a day shift, because they can afford to pay less people to work overnight and work long hours than what they would spend on the quantity of people that they have to work during the daytime. And less people overnight means more money in their pocket. Same thing with the loans. The more people with a pending loan, the more interest rates they're making. High interest rates for a small quantity of borrowers is not as good as lower interest rates for a larger quantity of borrowers. Now, the dynamic has completely flipped from people's original perspectives earlier this year. Today, the 10-year US Treasury yield, a key benchmark for all sorts of loans, has been trading in the low 4% range. And this is a world away from the rock bottom rates that we saw for years. It means that for the first time in a long time, you can get a respectable, predictable income stream from high quality government and corporate bonds. And this is the fundamental shift in the investment landscape. Now, for the third development, and you can argue it's the most impactful one for your long term finances. This is a story that is not getting nearly enough attention, but it has the potential to affect your take home pay more than any Fed decision or market swing. So I'm talking about the scheduled expiration of that Tax Cut and Job Act, or TCJA. Is a $34 trillion debt the biggest problem facing the country today? Absolutely not. The irresponsible spending habits of over 85% of Americans is the biggest problem that we're facing today. Inflation is based off of how much people are willing to spend more money for the same stuff, either in smaller portions or smaller quantities, because we just feel like we have to have it. The only reason why we are struggling as a people, not as a country, is because we're so damn wasteful. 170 million people in America can spend more money on TikTok than the rest of the world combined. That is wasteful. It's not a business opportunity for American people who are spending the money. It's a business opportunity for the billionaires that remind themselves that if you wave a stick in front of the poor, they will behave poorly, and you can benefit off of it. Capitalism is capitalizing on stupidity. It is capitalizing on the weak. It is capitalizing on the ignorant. So people who deliberately make bad choices, there's a profit for that. People who don't have the skill set and the strength to get things done, there's a profit for that. People who didn't know that what they were doing was costing them money, there's a profit for that. People who are afraid, there's a profit for that. Insurance. Insurance is reassuring you where you give me money until you need it so that I guarantee you that when you need it, I will cover whatever you need within limitations. And whenever you need something, it's outside of those limitations. You're giving me money on principle for peace of mind when you could have invested it somewhere else. And then when you needed the damn money, you would have had the damn money, right? So Americans being wasteful, that's the reason why. That's the biggest problem that we have in this country. And besides being wasteful, it's being disrespectful to one another. That's the other issue that we have in this country. But as it pertains to what's about to happen with the tax cuts, let's be very clear. This is not a proposal that we're talking about right here. This is not a political debate. This is the existing, written in stone, current law of the land. So in 2017, a massive tax reform through Donald Trump's era, uh, this bill was passed way back when. And nevertheless, this made the bill work with the Senate, and whatever the rules were, the budget rules were uh, in the House of the Senate. Most of the changes for individual taxpayers were designed to be temporary back then. They were given a firm expiration date, which was December 31st, 2025, unless Congress steps in and passes a new law to extend the cuts. And the US tax code will automatically snap back to the old pre 2018 rule on January of 2026. So, what does that mean in plain English for the rest of us? For the vast majority of American households, taxes are scheduled to go up significantly temporarily. Um, so it sounds like control of your money. Well, some people don't have control of anything. Their money, their rationale, logic, reason. It's crazy. It's amazing. They don't have a lot of stuff going on. Budget analysis call this a multi-trillion dollar event, referring to the cumulative tax increase over the next decade. But you'll feel the effects immediately. And this isn't some distant problem for politicians to solve. It's a concrete change that, under current law, will alter the numbers on your W 2 and your tax return starting just over a year from now. Not to mention, you're going to get a lot of discontent starting 4 weeks from now when you start filing taxes because no change can happen without recourse. And we're going to be talking about higher income tax rates, as much a much smaller standard deduction, a change to major credits that families rely on. And this is a slow moving but massive wave that is heading directly for your paychecks. That's yet to come. We're supposed to be experiencing some tax breaks and tax cuts, but we're going to be explaining how that works soon. Did you hear about Nemo Robot? No, I did not. I don't know anything about Nemo Robot. So There are three big stories. Now let's connect the dots and see what this all means for your wallet. This is where the headlines stop and the real world impacts begin. So we're going to break this down into three pillars of your financial life: your savings and debt, your investments, and your taxes. Hold on a second. He says, will the government get away with controlling everybody's money through the digital dollar when it gets rid of paper currency? Of course, because nobody pays attention. They don't take care of their own money. They waste money and they're not fiscally responsible. They're not paying attention to the bills. It's all about the people who allow someone they don't know to have more control over their life so that they don't have to have responsibility. Of course. And you say get away with as if your money hasn't been controlled already, because the only reason why you have to file taxes right now is because you have an agreement with your employer that you didn't read the fine print on, where you signed an agreement allowing them to take money out of your check and give it to the government on your behalf. And then you have to file taxes to have the government give it back to you. Yeah. So until you change that, yeah, they control your money. So now they're going to look at your income and determine if you deserve to get your money back. It should have never been taken out of your check in the first place. Do your best Jay Prince impression. I don't have a Prince impression, but I appreciate you stopping by. Now, the Fed's decision hits your bank accounts directly and immediately. So, for the past 2 years, as Feds were aggressively hiking rates, uh, savers were finally rewarded. We saw the rise of the high yield savings account, or HYSAs, and these accounts passed the Fed's higher rates on to the consumers. Suddenly, after more than a decade of earning basically nothing on our cash, we were seeing rates of 4%, 4.5%, and even more recently between 5% and 5.35%. Some credit unions have 5.5%, depending on which ones you go. And it has been perceived as a golden era for savers. The era is now changing yet again. They say your credit card will not be allowed out of the country. That's not true at all. You'll be able to utilize your credit card anywhere that Visa, MasterCard, American Express is accepted, unless your FICO score is 700. That is also false. Your FICO score does not determine where you spend money. Your FICO, technically it does, because your FICO score determines whether or not they'll lend you the money in the first place. But as far as you spending your own money or charging stuff to your card, FICO score's got nothing to do with that. Your FICO score does not dictate if your credit card is accessible inside or outside of the country. Your spending habits are, though, because if you utilize your credit card outside of the country without notifying your bank that you will be traveling outside of the country, they will consider those unusual payments as credit card fraud. So they'll freeze your account even if you have an 850, because you don't make those payments on your card. However, say you plan on going to the Philippines. If you buy a plane ticket for the Philippines from your credit card, then you make a payment from the Philippines on your credit card after the flight date. They're likely to not block your credit card. But if you put gas in your tank in Tampa, and then the next time you use your credit card is in Belize, they will block that transaction because they're going to assume that you're still in Tampa. So it's got nothing to do with your FICO score. So try taking 10,000 in cash to the airport. Yeah, get robbed by the Feds. If you don't get robbed by TSA agents, you're gonna get robbed by the Feds. You're gonna get robbed by somebody. You're gonna get robbed by the police. They're gonna steal your money. They're gonna steal your money. You would do better with a cashier's check or a money order. You could have 10 $1,000 money orders from an Amscot and get on the plane, and they won't give you no problems. But if you have $10,000 in cash, whether it's $100 bills or $1 bills or even coins, they're going to seize your assets. Matter of fact, if you got on the plane with $10,000 worth of gold bricks, they're likely to seize your assets. You would do better bringing a cashier's check or a money order where you can go to the bank in the new country, deposit your money into that bank minus exchange rate fees at the time that you go there, and then withdraw money from their bank account in their bank. What I would do though is I would go out there and establish my LLC and then set up a bank account for my business in that state, in that country, and then deposit it into that bank account under my LLC so that it doesn't have to be reported back to the US government. Because personal income is reported because there are tax treaties in most countries around the world for personal income, but professional and business income isn't covered under that. So if you've got an LLC in the United States and you bring that LLC to another country as a foreign domestic and you establish that business over there and then you establish a business bank account over there, the money that goes into that business bank account is not readily reported to the United States. Now, what you do with that knowledge is up to you. Remember to like and subscribe. And also utilize those reaction buttons. Keep mashing those reaction buttons. Uh, if you're watching us on YouTube or for the the shorts reel or the vertical long forms, whatever. The two rate cuts from September and October that I was talking to you guys about earlier have already started putting downward pressure on high interest accounts. So while you can still find fantastic rates in a lot of different areas, many top tier high interest savings are still offering APYs of well over 4%. And the general trend is going to be clear. Rates are beginning to drift lower. So let's make this real. Say you have $20,000 in an emergency fund and a 4.5% APY and annual percentage yield. That money earns you $900 in interest over the course of 12 months. And that is a significant risk free return since it's a roundabout or a little bit more than a government bond. But if the feds continue to cut rates and the high interest savings yields falls because they can change the rate at any time to say 3.5%, your annual earnings drops to $700. And if it falls to 2.5%, you're down to $500. And that is a $400 difference in your pocket for doing absolutely nothing simply because of the shift of rates in the environment. So that is a huge hit on people's money. It says I take $100,000. Dylan, you're not going nowhere with $100,000. Do you go to comedy clubs? No, I do a podcast every night. I appreciate the recommendation. Eventually, I'll go to a comedy club and I'll take the podcast with me because, unfortunately, comedy clubs are usually done in the evening times. And when they're done in the evening times, it cuts into my podcast. Okay, so is it true that foreign banks do not like to open accounts for U.S. residents because of the reporting requirements to the IRS? No, they do not care about you opening an account. As long as your documents are brought and they're legitimate documents from the embassy, whether you bring the information as a person or if you bring in information as a business, you will come to find out that you can establish offshore accounts on a regular basis. He says, roll up and angry fist. All right. I appreciate you, Dylan, for diving into the membership. Um, but back to what we were discussing just a moment ago, you're looking at when it comes down to opening up another account. Some countries don't even have your name on the account. It's just a serial number. If you're going there and you're establishing, you can establish an account under a trust. You can establish an account under a business name. However, you establish the account, they're going to take your money. They're going to open up the account. Whatever rules that they have for the account is going to be based on how much usage it has, how much money you put into the account, and other such things. That is what it's for. Okay. Then, if you decide to continuously use the account, continuously add money to the account will stay there. But if they have a service fee up there and you don't put more money in there than the service fee, eventually they're going to take all the money out of the account and the account's going to be gone. But they have no concerns about the IRS on the account. I don't understand why you're confused, Dylan. You're throwing in. Are you glitching right now because you have like 300 uh comments in here? Oh, it's coming from both of them. Your comments are coming from both membership, both the long form and the shorts reel. No, it's got you up here twice. It's got you up here as two different members because you're here on technically both the 16 by 9 version and the 9 by 16 version. It's still updating itself. It's still updating itself. I'm confused too, but fist on. um, Compared the changes in interest rates to the traditional savings accounts at a big brick and mortar bank, the national average APY for those accounts is still shockingly low, somewhere around 6.02 or even less percent. And on the same $20,000, that's just $120 of interest in a year. And the gap between a good high interest savings account and a traditional account is a chasm that a lot of people prefer to get into. So, the takeaway is that while the best rates are coming off their peaks, being passive about your cash is more costly than ever because if you're not putting it somewhere where it's going to make a lot of money. Oh, you're looking at some of the emojis that we made for this. I just realized which ones are coming up here. Some of the custom emojis that we created for the show. My buddy thought that these would be interesting to put in. That look, okay, real quick. I just realized what's going on. Hold on, before I keep going. So, Dylan, those emojis were me in a suit, and Mr. Pibbs created some emojis. He paid somebody to create us some custom emojis, and then we added them on YouTube and put them into the membership. So you've got the angry me, the confused me, and then me with the pistol. But we had to call that roll up because we couldn't because YouTube is like you know you can't even say you know on in the comment section pistols. And then we have the boxing stance, the fighter stance, and that one is identified as fist. So then the codes for it, where you can type them in, are actually coming up on this screen because StreamYard does not recognize the emojis from YouTube yet. So they're not showing up as emojis on my screen. They're just showing up as icons. And I'm like, confused, fist, roll up, angry. What is that? And I'm like, oh, dip. That's the custom emojis from the membership. Yeah, we put a lot of effort into the membership, and we were supposed to be adding a bunch of new things into the membership. But you know, it's a whole lot of extra work. I put more effort into it, the more members that I have. Nice. He said they're fun, and the boxer stance looks like someone whistling. Well, we couldn't get a pimp hand strong and just backslap folks. We couldn't get one of those. We should have, but we didn't. we have some of these icons on our memorabilia in our store, and depending on the membership level, there is a discount there. So if you ever wanted to get something out of the membership, you let me know, and based on the membership level, you would get a rebate code where you could either pick up on like the this and that cup, or we have a few of the this and that shirts, hoodies, hats, fitted hats, stuff to that effect, or decal stickers that includes like the boxer, and the actually I think the one that we have as a decal sticker is the roll up one, and uh, then we have like cooking aprons and other such things, which is actually I think it's pretty interesting stuff, with the throw pillow and the little pendant thing. So if you had a girl, you could get them a this and that pendant, or if you had a throw pillow, you got a girl that likes to throw stuff, you get you a few throw pillows and put them in the house. And whenever she decides to get mad or get angry or get excited or get extremely happy, she can throw something that's not going to break your spleen. Either no matchy matchy tie and shirt. Well, it's not so. It's actually technically it is because you have the black and green, and then you have the green accents into the tie, and then you have the gold accents to it, and then green is actually blue and yellow, and this is a dark blue which blends in with the greens. These are relatively close to neutral colors, offset with the yellow undertone and the chocolate skin, and we're looking at technically it does match, but there it is. Is that so? Now you believe me about the moon, right? It makes sense. It is a space. Now that he's a member, I'm supposed to say that the moon is a Death Star outside the planet. uh, uh, about 40 of y'all in a membership, and then we can have a private live stream on Sundays where we can talk about all of the stuff. That's when I could pull out the alcohol because we'll have no sponsors and it'll be commercial free. Um, Now, back to the main topic, there is another side to the coin of the interest change. While falling rates are a headwind for your savings, they are a tailwind for your debt. And this is a silver lining, which is one of the reasons why when Michael was asking, is this a good thing or not? Technically, it's a good thing, but technically, for the average investor, it might be a little bit cumbersome. Lower rates are great for borrowers, especially if you have variable rates, which means that your rates will change with the market. They're not fixed, such as home equity lines of credit, HELOCs, or adjustable mortgage rates, ARMs, or variable rates on your credit cards. Your interest rates is often tied directly to the prime rate, which moves with the Feds. And those quarter point cuts likely meant small but immediate reductions in your monthly payments if the Feds cut it again. And then you'll see another dip. So then you would not need as much money to pay the minimum. But again, if you're only paying the minimum, you're primarily paying large majority of interest and you're not actually touching the principal. It is more effective for you to put more assets, more capital towards cutting down the principal. And then if you're going to establish revolving lines of credit, start you up a newer line of revolving credit. Or if you're going to remortgage the loan, like for example, if you had a $15,000 loan with your bank, you paid it down to 1,000, and then you ask your bank to get you another $15,000 loan where you pay that 1,000 off and owe 14. You can work something out like that where you still got your revolving installment loan, but you're making massive strides on the borrowing of whatever money that you're doing. If you're borrowing the money and you're putting it into high interest accounts where the money that you borrowed are paying you back more money per month than the money that you have to pay them, then that's the cost of doing business because your stocks are going to be at a certain rate, and your monthly payments for your loan is going to be at a certain rate, and those dividends are going to come in regularly and go directly towards covering that loan. So you can utilize that as a tax blanket. But the principal of your loan is always going to be there, which benefits you over time because eventually you will have that much money in the bank, and you would still be able to go back and take out another installment loan. And if you have more money in your portfolio than you have in your the loan that you borrowed, you can make even larger payments to pay down a debt, which reduces the quantity of interest that you have to pay. But you still keep that difference. So if you had 100 grand and you took out a small business loan for 50 grand and you put that towards 100 grand, and now you got 150 grand paying you back interest, you would essentially be getting back about 20 or 30 grand that you could be putting towards annually the 50 grand loan. And if you're able to pay them back in 18 months for borrowing 50 grand, you're going to be a lot more pleasant to borrow to lenders because you pay them back. He says, I am renting out my spare bedroom to a family of squirrels. They pay me in pecans. Is it driving me nuts? Well, I got to tell you, if you roast those pecans and glaze them with some honey and a little bit of salt, it'll be really good for the summertime. Now, as it pertains to HELOCs and ARMs, and as I mentioned to you guys before, the idea is going to be similar with credit card debt because credit cards APRs shot up to record highs as the Fed hikes the rates, as far up as like 29%. Uh, so now they should finally start to see some relief. But the world of caution that you guys got to remember is that card issuers are famously quick to rise your APR when the Fed hikes the interest rates, but painfully slow to lower it when the Feds cut it. So don't expect your 22% APR to magically become 18% overnight. It's likely not going to change that quickly. It will be a slow and gradual decline. They're probably going to make changes towards your rates when they go to reevaluate your credit score. Any excuse that they can use to not lower your rates. Now, let's talk about the feeling many investors have right now. Because after a year of solid gains, the market feels confusing. You see good economic news and the market's dropping. You see bad news and it rallies. You thought when the crash happened that everything was going to go to shit, but it stayed stable. And then we had a 17% increase. And like I told you guys, it was going to bounce. It went up about, actually, it went up about 3.4% from its down level in during the shutdown between October and November. It went up 3.4% to where it is right now, but it has a 17% year over year, where it is even higher this year than what it was last year immediately after the shutdown. I know this feels illogical. So you'd be worried about your 401k, right? Let's put it in perspective. As we said, the S&P 500 is one of the many stock options we have in the United States, like the NASDAQ, had strong years, a period of moving sideways after a big run up isn't just normal, it's healthy. It's the market catching its breath, right? The primary risk right now isn't a market crash, but a repricing of expenditures and expectations. So if the market has fully priced in a perfect soft landing and the series of smooth rate cuts, but the economy turns out to be bumpier, there will be volatility. This is not the time to panic, though. It is the time to reinforce good habits. Panicking and selling during uncertain times is one of the fastest ways to destroy long term wealth. You just seen how they lost that 21% of Bitcoin and they gained back like seven. You seen how it went from $34 for SMX to $340 and went down to 266. Panicking and running Not always a good thing. Continuing to invest a set amount on a regular scheduled dollar cost average is a strategy designed for exactly this kind of market. You have to make sure that you're grabbing you a long haul investment opportunity. The biggest strategic shift for investors is about stocks. It is about bonds. As I said, bonds are back. So to understand why, picture a seesaw. On the one end is a bond's price, and on the other end is its yield or interest rate. When interest rates go up, the value of the existing rates, you'll see lower bonds because the bonds will go down. That's what hurt so many of us between 2022 and 2023. Now that we're on the other side of this seesaw with interest rates that have peaked and are now potentially falling, the dynamic has flipped. So new bonds are being issued with an attractive yield. And the 10-year treasury has been yielding over 4%, offering a meaningful and secure source of income. So when I was telling you guys to put your money into the cash dividends that are giving you 18 and 20%, you could take the cash dividends and go and get you a treasury bond that gives you a secured 4%. Now, the treasury bond is not going to give you a monthly payment, but the treasury bond can potentially be a tax deferred scenario that could benefit you over the next 10 or 20 years once it matures. And that guarantee gives you a better benefit down the line. Now, this changes the whole calculation for a balanced portfolio because for years, with bond yields nearing zero, investors were told, Tina, there is no alternative to stocks for generating returns. That is no longer true because you now have real alternatives for income focused investors or those nearing retirement. This is a game changer. You can now build a portion of your portfolio using tools like bond funds or even a bond ladder to lock in these attractive yields and create a predictable stream of income. For a decade, the market forced everyone to be a growth stock hunter, which is why we primarily on some of these shows talk a lot about different growth stocks that don't pay you annual returns. We had people come to the show that would widely gab about switching over to cryptocurrency because it has larger returns on a successful trade, or false information about massive gold hikes. But now the market is allowing you to be a yield farmer again, methodically harvesting steady income, which is something that I continue to encourage you guys because we want to make sure that we are putting our money in places where our money is making money for us on a regular basis so that we are no longer struggling to make ends meet. It doesn't matter what else you do for a living. What matters is that you don't have to worry about the extra. Like for the people that got furloughed. Special shout out to Lushy. He says you're from the Matrix. It's badass. I appreciate you, bro. Um, like the people that got furloughed from the government. If they had general capital coming in from somewhere other than their original investment opportunities or their standard of income, the fact is that when money stopped coming in from over here, they've got money still coming in from over here. They can still subsidize. If they're living at 30%, if 50% of their income was coming from the government and they lost that 50% of income, they still have 50% of their income where they're still living at 30% of their total income, which means they still have 20% more than what they needed, which means they would not have been hurting. Living from check to check, you're living off of 90 to 100% of your income, where the only money that you keep in your pocket is enough to put gas in your car until the next time you get paid. You have a situation where you're holding just enough money to feed yourself until the next time you get paid. And then when you get paid, you try to take a little bit of money out of your check to hold yourself over till the next time you get paid. and you take the rest of your money and put it on bills. Sometimes people hold a little bit of entertainment money to go to the club, to go buy drinks, to go hang out with their homies, to take girls out on dates, to do your hair and all this other stuff. And the rest of the money goes on bills. You are broke after you're done. And a lot of times people charge everything else that they need in between the last dollar they had and the next dollar they get onto their credit card, where the first thing that they do is pay off their credit card so they have a blanket in between their paycheck and their spending, and then do the same thing all over again, where you're essentially using 99 to 100% of your income. So if your checks stop coming in, you can't pay the credit cards. You can't you can't spend money anywhere. It's strange. It's unfortunately you have no idea what you're talking about. Actually, I have more knowledge about it than you will ever have because we do this research on a regular basis. But I greatly appreciate your opinion. He said, does the 10-year T bond lock in the interest rate when you buy it for 10 years? Okay, so the interest rate that you get when you get the loan is the interest rate that you're locked in with. The 10-year T bonds that are being picked up now are being picked up now at higher rates than the T bonds that were being picked up years ago. So, yes, to answer your question, yes, the variable interest rates as to when you decide to pick up these loans, or not the loans, the bonds, are more favorable to you now than what they were in 22 and in 23. Yes, that he got it all wrong. Educate us with some information. notice, notice how consistency from the fans that ask good questions, and then inconsistency from the ones that do not have the facts. I really appreciate you, Lushy. Thank you for coming in, Lushy Stanley. Thank you so much. But I got to tell you, we're sticking to the facts. Now, this part of the show, I need you guys to really tune into because it will almost certainly affect you guys. The window to prepare for this is closing extremely fast. Again, this isn't a political prediction. This is based on the law as it is written today. Those tax cuts that I told you guys about at the beginning of the show, the Tax Cuts and Jobs Act of 2017 is set to expire for individuals on December 31st, 2025. So on January 1st, 2026, unless the new law is passed, the tax code reverts to the old rules from 2017. Now we're expecting them to pass that law, but you got to remember we're pending a shutdown on January 30th. Now, this creates a tax cliff, and here's what it's going to look like for the average household. First, the standard deductions get slashed. The TCJA roughly doubled the standard deductions, so letting you earn a bigger chunk of income tax free. When the provision expires, the standard deduction is set to be cut roughly in half. So adjusted for inflation is what we're going to be experiencing. For a married couple, that could mean tens of thousands of additional dollars of their income suddenly becoming taxable. Second, your income tax bracket goes up. The TCJA lowered tax rates for most people, and we're expecting and hoping that we're going to see that another cut happen. But again, they've got to get past their lack of agreements since October. They got to get past that for tax season of 2026. Now in 2026, under the current law, they are scheduled to snap back to their higher pre-TCJA levers, which is not what we're going to be dealing with our tax season for 2025 in the 2026 year. It is going to be what we're going to experience for our 2026 tax season when we're doing taxes in 2027. What we have right now is a 12% bracket that, if nothing changes, will go back up to 15. The 22% bracket will go up to 25. The 24% bracket will go up to 28. And then there's the top rate that used to be around 30. That's now going to be at about 37 to 39. That that's not what we were hoping for. right? Even if your salary doesn't change one bit, you could automatically find yourself in a higher tax bracket, paying more tax on the same earnings. So a family in the 22% bracket today will find themselves in the 25% bracket next year in 2026, and they will be feeling a direct hit to their take home pay. Now, just a second, I just found out that my battery is low on these headsets because I took the hit. I used this headset to do yesterday's podcast, and I haven't charged it since yesterday's podcast. So now I got to switch headsets for today's podcast. Let's see here. There it is. Now, like I was saying, I got these things off of Temu for like $22 a piece. And just like I told you guys with the electric cars, you got to charge them. So since it's got like a 30-minute charge time on the headset, if I use it until I don't need it, then just switch them out, I have an instant different headset that'll last me for another 18 to 24 hours. But if I was relying on one headset, after that headset died, it would be done. I would have to literally disconnect it and charge it up after each use in order to make sure that it had enough power to run through the podcast. Now, which is wild because when we think about that with electric cars, is that, yeah, 500-mile range is fantastic if it does go that far, but it's really only beneficial to us if wherever we're going is not going to utilize 80% of the charge rate of the car, because we would eventually have to park the car and plug the car back in. And if we have stuff to do and it's an hour and a half charge time on the car, we're not going to get the usage out of it that we would get out of a gas powered car. But let's go back to what we were talking about with these tax cuts, because a third major credit change is the child tax credit, which currently is $2,000 per child. And we said that Donald Trump had that set, and it is scheduled to revert back to $1,000. And the much higher estate tax exemption, which allows individuals to pass on millions of tax-free dollars, is set to be cut in half as well. There is one silver lining, though, for a specific group. The $10,000 cap on the state and local tax deduction, known as the SALT deduction, is also set to expire as well. So for people in high tax states like New York or California, its removal could actually provide some tax relief because they had gotten rid of a lot of the state taxes as opposed to all of the federal taxes that they were reducing. But for the majority of the country, and the net result of all of these changes is a noticeable tax increase. So now that we have gotten a lot of this information out, and I know that the tax part can be a dense and a little scary portion of the show, the goal isn't to cause a lot of panic, but to encourage preparation. Because if you want to get a better handle on building a tax efficient financial plan, you have to have the knowledge. So a lot of the times you guys have to get a walkthrough of the core strategies, and it covers tax advantages, tax accounts, withdrawal strategies, and a whole lot more. You need to be able to figure out exactly what you're trying to accomplish. And a lot of this stuff I can try to help you guys with, or at least direct you to the individuals who know what you do. Now, let's get to the most important part. What do you do about all of this? Because one of the things that we're going to be doing, because I know Dylan's into the membership, we're going to be posting after the show today all of the upcoming dividend rotation dates for December and January. And actually, I'm going to put in there the record date and the projected ex-dividend date, so that you know which days you have to own the stock by, and then you can follow the dividend rotation strategy if you're interested in it. And I will be trying to update a lot of the values on the stocks this week, because I'm trying to get me some more free time in there somewhere. I've almost taken me a vacation. I've been asleep, trying to make up for all the lack of sleep that I've been getting, burning the candle at both ends. But you guys got to remember, knowledge is power, but it is only power when you act on it. So here is your simple 3-step checklist. The era of effortless 5% returns on savings is currently ending. It is time to be proactive. First, your emergency fund, that's supposed to be about 3 to 6 months of your living expenses, if not 18 months of your living expenses, if you're doing it better. Where is it right now? Think about that. If it's in a checking account or a regular savings account, you're probably losing ground to inflation every single day. If you divided it up across a bunch of savings accounts that's offering you that introductory like 5 to 25% interest rate on your checking account for the first like $500, you could take advantage of that and just get you a different account in a different bank and cross 100 banks and get you at $500. That's $500,000. Or well, 500, yeah, 100 bank, yeah, you'd be about $50,000, about $50,000, not $500,000, because you have 100 banks, so that'd be about $50,000. Now, but you'd still be locking in that 5 to 5.25% interest. But you could take the extra money and you can go to yet another financial institution. You could compare this financial information on the websites. You want to be able to look at the best high interest savings accounts that each bank has. And if you have a checking account that's giving you $500 and you have a high interest savings account that might be able to give you the same amount or more, you can take some of the extra money and put it into the savings account. As of today, if your high interest savings account is earning less than 4% interest rates, you can likely do better with just a few clicks by changing to another bank or taking the money out of that account and investing it into a high interest stock option that's going to pay you dividends on a monthly basis. Second, for cash beyond your emergency fund, consider locking in whatever rates are available today, because as Fed cuts yields on certificates of deposit or CDs, you'll also be able to see these yields fall. So by opening on CDs today, you can lock in whatever the current rate is, and that attractive rate will be set for a period of time, like 1 or 2 years if you get a regular one, or if you get one locked in at 10 years that has a fixed rate. You could also build a ladder by splitting your cash into multiple CDs with different maturity dates, where when one CD matures, another CD starts up. This is a defensive move to protect your savings, but it also allows you to get your money a little bit sooner. You can get CDs in like 3-month intervals. And if you open up a different CD every month, 12 different months after the first 90 days, you will start seeing maturity of each one of your accounts, which gives you the ability, if you're doing a stair-stepping scenario, to reinvest it with the new interest back into that account. But it also gives you the ability that if in the event that month that you're getting money back from an investment and you're hard up, instead of you closing out something with a penalty, you can just benefit from the maturity of a CD from 4 months ago and utilize that money to take care of whatever you got going on right now. There are a lot of different ways to give yourself a buffer before you have to start borrowing money from somewhere else if you're not living from paycheck to paycheck. So when it comes to your long-term investments like your 401ks and your Roth IRAs, the mantra is rebalance.
Don't react. Reacting is panic selling at the worst possible time. Rebalancing is disciplined strategic adjustments. Your actions are important. The action items is to review your investment allocations, how much money you've put across all investment opportunities, your mix of stocks and bonds, gold, silver, platinum, uranium, lithium, ion, um, copper, Bitcoin, real estate, and then look at how much you've invested in each one. Maybe your target is to have 70% stock and 30% bonds, or you might want to have 5% Bitcoin, 10% real estate, and 15% bond. After a strong year of stocks, you might have drifted to 80% stocks and 20% bonds. You're now taking more risks than you intended to do, which allows you to now rebalance. And rebalancing means selling some of what you did well on and then buying what didn't do good. It's the definition of selling high and buying low. So right now, it's a double smart move because you're trimming some profits while redeploying the cash into bonds to capture the attractive yields of over 4% that are currently now available for a limited time. And this isn't a market taming scenario, it's just returning your portfolio to its long term strategy. It's a simple risk management situation. If you grab a lot of the stocks that we have on the show and you grab the 15 most undervalued stocks with the highest paid dividends and you ran those for a year, you would be averaging between 17 and 21% interest, depending on how you balance out your account. You would be getting cash dividends every month, but you would also be getting cash dividends every quarter. And depending on which stocks you get, each quarter would resolve itself 30 days from the other account, which means you would still be getting money every month. It's just that the amount of money would vary based on the stocks that were due. Now, if you are trying to make sure that you can pay yourself every month, you allow for your buy and hold stocks to stay as they are. And then when you see a dip, you buy into the dip. When one of the stocks has an unexpected spike, you can sell the difference on that spike and then hold it to buy the dip. Sometimes you can sell the unexpected spike and buy the dip on a cheaper stock. Or if your primary stock, like say PSEC or Orchid Island, has a fantastic scenario and it starts spiking up, or not spiking up, it can start dipping down, and you could just start buying a bunch of that because you already know that that one's going to pay you a decent quantity of money. You would be able to have 40 or 50% on that one if you wanted to, but that would be offsetting, off balancing your account and leaning towards more risk. But for those individuals that have just one stock, it is better for you to get a second stock. That diversifies your portfolio. And if you diversify your portfolio from one stock to two stocks, and the second stock is giving you more money back every year, and then you can diversify those two stocks to a third stock, where the three stocks are giving you more money per year than the first stock, and you can clearly buy one stock a month simply off of your dividends until you're satisfied. You can reinvest into the newer stocks more often until they reach the level of your highest stock. Rebalancing slow. You don't have to sell 50% of a $50,000 stock just to rebalance your portfolio. But I mean, if you're getting 10 or 15 or $20,000 a year off of that 50 grand, you could take that and put it towards two or three other cash stocks that pays you every month, where you would then be making $2,000 or $3,000 a month off of those new stocks and still making that $5,000 or $10,000 or $12,000 off of the old stock. which essentially gives you even more money every month. Now, the goal is that if you manage to exceed your standard of living with the dividend distribution that you're getting, that is when you're capable of quitting your job altogether. But if you wanted to continue working on your job, just like as a little side hustle, gives you something to do, your entire standard of living is covered. And anything that you don't need, you reinvest it into your portfolio, which gives you the ability to rebalance into other things. You can go from being a mono stock portfolio to having stock, gold, and silver. You can go from having mono stock in precious metals to having stock, precious metals, and Bitcoin. You can leverage all of those assets. Since you're doing buy and holds, you can leverage all of those assets and then get into real estate. And then you can leverage the tenants from the real estate to invest into more real estate. And now you're starting to build on a life where you're paying a management company to manage your property so you don't have to. The money is coming in from everywhere. And whatever you don't need, you put it into the investment opportunity. And then you take a line of credit across the whole board and use that line of credit to buy yourself a new house or buy yourself a new car. And then they pay on the dividends. If you buy the business a new car, that's a tax deduction. So you end up walking out of the year with a $0 bill, a $0 tax bill, and more stuff. Then you can start traveling. You can start setting up your business in other states. You can travel and start setting up your business in other countries. And when you're traveling somewhere, even though you're going to enjoy yourself on somewhat of a vacation, you're traveling there for work purposes. If you expand the business while you're on vacation, that's a business trip, which becomes a tax deduction. So now you're flying at least business class and getting business class deductions, which makes more sense for you. But in order for you to have more money, you have to spend less money on things you don't need to put it somewhere where you can make more money, so that you can take the extra money and put it somewhere else so that you can make even more money, so that you can take that money and put it somewhere else so that you can make even more money. Noticing you're not putting it back where you got the money the first time. You're putting it somewhere else so that you can make even more money, because you already have a revenue stream to begin with. You want to get 5 or 7 or 10 or 20 different revenue streams. You want to have so many revenue streams that you don't have to worry about where your money's coming from. That's how you're satisfied with your retirement. So when we start talking about taxation, this is the most important action on the list. Do not wait until your 2025 filing tax year starts in the spring of 26, because by then it's a little bit too late. The best moves are made in the year before a higher tax environment arrives. So your first action is to take a full advantage of the 2025 year. So this coming year, potentially the last year under the current more favorable tax rules, means that you should aggressively maximize your contributions to your tax deferred retirements right now. Accounts like traditional 401ks and traditional IRAs or your HSAs, every dollar contributed is a dollar shielded from tax income this year. And this is always a good strategy, but it's even more powerful when you think your tax rate will be higher in the future. Your second action is to seriously consider Roth conversions in 2025. A Roth conversion is when you move money from a pre-taxed retirement account to a Roth IRA and pay income tax on it today. Why would you pay taxes early? Well, because if you're confident your tax rate will be significantly higher in 2026 and beyond, it could make sense to pay the tax now at today's lower rates. Then that money can grow completely tax-free forever. And this is a complex decision, but it's the perfect topic to discuss with the financial professionals. Or we can talk about it on the show. We can mow it over with each other on the show, but these are things that people don't think about. Which brings me to your final, most crucial action. sometime in the first half of 2025, you were supposed to be scheduling meetings with your tax pro certified financial planner, or scheduling meetings with a tax agent of some sort, tax lawyers. You want to ask somebody, if you didn't do it in the first half of 2025, you want to get it done right now. Ask them powerful questions like, based on the scheduled expirations of the TCJA, how will my tax situations change, and what can I do in 25 to prepare? Now, you only got a few weeks to get that taken care of, but knowing that this is what's going to happen in 26, you need to start figuring out what else can you do in 25 before the end of the year. That single conversion could save you thousands of dollars. So let's boil this down. There are a lot of moves, and there's so many parts that impact each other, but you don't need to be an expert to make the smart moves. The first party for cash savings is winding down. So the era of easy rising rates is likely over, at least for now. And you now need to be proactive to make sure that your cash is still working for you. You have to go back and take a look at what you're making. Second, the investment landscape has shifted. The stock market is asking for patience and discipline, which you need to have. You cannot play to the tune of individuals that jump up onto the podcast and scream at the top of their lungs, sell everything. We're going to have $25,000 in gold, and Bitcoin's going to be $1 million. You can't listen to the falsehoods of the individuals that are speaking beyond too good to be true. While bonds are finally offering a reliable income stream we haven't yet seen in years, a balanced approach is still more important than ever. You have to maintain balance in your portfolio. It's not about the get rich quick scheme. It's not about leveraging all of your money towards one surefire thing and riding the 20% wave forever. It is maintaining balance so that if that 20% company tanks, that you don't lose all your money. The bigger the risk, the bigger the reward, but the higher the gamble, the more you lose. And third, a major tax reset is scheduled under the current law for January 1st of 2026. And if we do not see the finalizations of change where they potentially put more cutbacks in, we may see a lot more expenses that we're going to have to cover for next year. Now, ignoring this isn't an option. Planning for the changes in 26 throughout 25 is the most powerful thing that you could have done to protect your financial well-being. But since you probably didn't think about that until I covered it on today's show, you need to start proactively looking at the things that can better you going forward. Breaking these things down into understandable pieces and focusing on a few key actions helps you stay in control of what you want to succeed in. So you don't have to be a victim of the headlines. You can be a student of the knowledge and information that comes behind those headlines. If you found this breakdown helpful, please do me a small favor and hit that subscription button, the notification button. Do like Dylan, join the membership. It helps the channel a ton, and it makes sure that you won't miss out on our updates as these stories develop. Now, I have a question for you guys on our way out. If these three shifts, and these are huge shifts, changing interest rates, stock market volatility, or the looming 2026 tax cliff, which one of these is your biggest focus right now? Let me know in the comments, because I read every single one of them, especially all of the roll-ups. And I'd love to hear what you guys think, what's on your mind about what's going to be happening in the upcoming year, because here on This and That, where we talk about this, that, and everything in between, I give you guys the information that you guys need to make yourselves higher value men, and giving you guys new knowledge that aids you in your ability to make the changes in your life that are in your control where you can then navigate around things that are outside of your control. And ladies, while this is a male-driven podcast from the male's perspective, y'all can take this knowledge as well and utilize this to make yourselves higher value women as well, while finding a partner that is on the same wavelength, is on the same mentality as you as far as saving and investing. It takes so much strain and frustration out of a relationship, because one of the biggest things that causes breakups beyond infidelity is financial arguments. So learning how to make, save, and invest will make you more savvy for your next relationship. Now, what I'm going to say on my way out the door, special shout out to Dylan, a special shout out to Michael. On my way out the door, ladies, as long as the situation doesn't make sense, I'm going to keep asking you ladies to make it make sense. So ladies, please make it make sense. Before we go, I'm going to be giving you guys, for those individuals that do pop into the membership, I'm going to be putting updates later tonight or tomorrow related to the dividend rotation strategy, so that you will have a full list of all of the stocks from the core satellite platform, and then you will have another list of which ones are going to be primed up over the next 60 days, so that you know which stocks that you should be trying to look at to consider investing in if you're going to follow the dividend rotation strategy, or if you're just going to pick which stocks you're going to buy and hold for your core satellite. He wants to talk about the moon now. So before we wrap things up, what do you want to tell me about the moon, Dylan? Dylan wants to talk about the moon before we go. Let's talk about the moon. So rumors about the moon being fake. So far, what I see here is that the moon is real, and the Apollo moon landings were supposedly real, and the fake moon and fake landing ideas are modern conspiracy theories that have been repeatedly debunked by extensive physical, geographic, and independent observational evidences. Now, rumors that the moon landings were faked became popular in the 70s and have been kept alive by TV specials, internet forums, and social media posts claiming supposed anomalies in the photos, flags, shadows, and radiation risks. Polls over the years show a small but persistent minority of people in several countries saying they think the landings were staged, which keeps the topic in public discussion. Hold on a second, though. Let's take a little shift, though. The moon is a spaceship. You say you want to talk about the moon. Let's cover the moon for real quick. The idea that the moon is a spaceship is a science fiction style conspiracy theory, not something supported by astronomy, planetary science, or any real observations of the moon. They say, how could it be a giant spaceship? I don't know. They said, well, the moon is real. The real spaceship is hidden underneath. There is a giant a city. Okay, now that came from Transformers: Dark Side of the Moon. Is there a spaceship on or behind the moon? Now, we don't have very much credible evidence of any spaceships on, in, or hiding behind the moon. All observations from crewed missions, robotic landers, and rovers, and many orbiters from multiple countries show only natural terrain, rock, dust, and human-made hardware like landers and impact stages. So spacecrafts from the United States, Europe, China, India, Japan, and others have mapped essentially the entire lunar surface at high resolution. So what are the cities on the moon? Uh, Anybody that takes mushrooms could very well possibly agree with me. Maybe there is a tiny star inside the moon. I don't know about that. Now, there are currently no real cities on the moon. Every structure on the lunar surface so far is an uncrewed or crewed mission artifact, not a settlement or functioning town. So the only human-made things on the moon are mission hardware, landers, decent stages, rovers, impact probes, flags, experiment packages, and crash sites from missions by the United States, USSR, Russia, China, India, Japan, Europe, and a few private and partner crafts. So these are isolated pieces of equipment scattered across the surface, not connected habitats with power, life support, or any type of population. They do have a plan for lunar base, though. Space agencies and companies are actively planning to test concepts of small research bases or mining outposts near the lunar poles where there is accessible water, ice, and good sunlight. And those ideas include using lava tubes or buried habitats as future cities, but none of those have been built yet. So all cities on the moon, you may have seen on videos, are artwork or speculative concepts or areas of perceived science fiction. I don't know how they would fit a spaceship behind the moon because it depends on how big the moon is versus a spaceship. All science fiction movies are just made to develop our minds to be aware of the possible. Yes, I agree. I do agree. Um, Most people believe the moon is just a rock. I think our creators live inside the moon. Now, I don't believe we don't live inside of Earth. I don't believe anything lives inside the moon. If we had creators that may have used to live inside the moon, the way we had life on Mars, I believe that they may have moved on from that particular location. There is nothing currently there. I do not believe that there is a million miles under the crust of the moon is a species of individuals more advanced than us waiting for us to invade. Reason being is because most species are defensive. So when we start approaching them with our weapons, usually they will defend. And that would make more sense to me that if we attempted to land on the moon, that we experience some resistance, that some of our people would be attacked by something, that our people would be coming back with less people than what went out there. That would lead to me having the observation that there is life on this planet. But to have life on the planet and we never encounter that life on the planet, I don't believe that to be logical. So the easiest way I can explain it, have you heard of camouflage blankets? I mean, let's just go off of the hypothetical of camouflage attire where you can just cloak your whole self. The fact is that even though we would not allegedly be able to see whatever city that they have, the closer we get to it, the more defensive they're going to become of it. We're going to see vehicles being destroyed. We're going to see people coming up missing. We're going to see hostages taken. We're going to run into something and we don't know what it was that we hit. You know what I'm saying? Like the fact is that we can't comb the largest majority of the planet and say that we've never accidentally bumped into an invisible object that we didn't see. So I'm not saying that we don't have other forms of more advanced life outside of the planet Earth. What I'm saying is that it is unlikely that on the moon, while we still traverse it, it exists undisturbed by our presence. Now, under the smallest hypothetical of what if they buried underground and as long as we don't dig deep enough, they're not going to mess with us. That would not be the same species that would be considered our creators. Because if they were our creators, they would have more power than us, in my observation. I doubt that a species that could create life like us would have less technology than we do to thrive. That would be my observation. Everything from growth to defensive measures, I believe that what we've been able to manifest with the multiple races and multiple languages and multiple levels of technology, the rumors we have with the pyramids in Egypt being spaceship launch pads and all of this other stuff, the skills that they had back in the Egyptian days, that we would likely see a species with floating islands like Atlantis and stuff to that effect, far more advanced than what we had, what we've got. And I doubt that they would be in any way, shape, or form intimidated by our presence. And the same way we treat ants that invade our yard, the same way we treat stray dogs, we're not likely to take in strangers. They're not likely to take us in. That's my observation. Now, can we have an ET phone home moment? Can we have a Men in Black moment? Can Agent J stop the planet apocalypse? Can we have aliens walking the planet Earth that looks just like humans? Of course we can. Of course, anything's possible. Because in order for somebody to think this up, there has to be enough information lying somewhere that leads to the fact that it might have, could quite possibly have happened. He said the moon's surface is just camouflage surface. There is a superstructure underneath the layer, and they are super advanced and are hidden there. They are our ancestors, but they are hidden because we are almost wiped out by the other aliens. Well, I don't know about that either. I mean, you could say that. That's almost like the concept from Transformers, where inside of the moon was a deep structure. The moon was an entire transformer, right? That was a story behind that. But if our species and our ancestor species is almost wiped out, I would assume the same way we marched on Washington, that our ancestors are not going to allow us to encroach on their territory. I'm a firm believer that with as combative as we are, our ancestors are no more peaceful than we are. There will be a budding of some organisms, some kind of way. I don't know if it's going to be a budding of heads, budding of guns, budding of unplugging each other's oxygen tubes. I don't know what it's going to be. But there should be levels of territorial behavior with their species and ours. That would be my observation. Now, since we've tap danced on our discussion about the moon, we've tap danced on extraterrestrial presences. Okay, he says very similarly. So our ancestors hid inside a cloaked spaceship called Moonbase 1. The aliens thought they wiped us out on Earth. Okay, so a planetary invasion happened. They evacuated to the moon. Then the invasion left. What if Here goes a left field hypothetical. What if we were the invaders? What if the planet was inhabited by another species and our ancestors came down and our ancestors had the pyramids and our ancestors wiped out the species that was here and our ancestors had the kingdom of Atlantis and then our ancestors killed each other off and all that's left is a human race now where whoever used to be here may have fled to the moon. Let's dance off of this hypothetical. Then if we went to the moon, they would still have a defensive party. When safe, they send a few million to Earth to repopulate, which also means that if they got some anime based on this concept, we would be at odds with our descendants because we are a conflictual species. The other species is back in the Delta Quadrant, and yet we can't get along to vote for the same political party. So it is my understanding that we're in a position where, again, if there is someone there, they are definitely doing a good job of avoiding. But my observation of at least Western culture, strangers on my doorstep is a no-no in our species. Look at what we're doing to the immigrants. We're deporting them. Because if you didn't come with an invitation, you're not welcome here. So I cannot imagine even our ancestral species on the moon tolerating us encroaching on their habitat, if that were the case. They're among us. Our ancestors have a 100 delegates that are always watching here on Earth. Okay, so that still means that if they're on Earth, they're not on the moon. But if their home base is on the moon, if their spaceship would be on the moon and they're on the moon and we go to the moon, we would be invading their territory. And yet again, they would have zero tolerance towards that. Don't let us find their ship, right? Even if that means relocate the moon. The dynamic is still going to be the same. We need to evolve to a peacetime for our ancestors to make their presence aware, which also means that anybody who gets close to the ancestors will disappear so that we don't come in contact with the ancestor. The concept is still the same. I've seen this level of information from the 100. I watched that show on Netflix too. In order to ascend, there are about 1 million people living inside the moon. I don't know. It's hard to find. They live for 800 to 1,000 years old, which means in 2025, if they have 25 kids around, you know what I mean? Because if they live to be 1,000 years old, the ones that were created in 800, because we're in 2025 right now, so it would have had to have been like 1,025, and they would just be passing over right now. We still would not be allowed to go near their ship. Specifically because if they walk among us, they know how combative we are. They know that we're going to steal their ship, we're going to test it, we're going to kidnap their people, we're probably going to violate their women, we're going to cut everybody open and experiment on them and torture them until they die. That's what we do as a species. Every country around the world. Now they have personal spaceships. Again, they're not going to let us get close to those. Personal force fields. Again, they're not going to let us come close to them. it's still that regardless of how big this plot gets, regardless of how big this plot gets, this leading into a very massive conspiracy theory, no matter how big the plot gets, we're still in a situation where we're not going to be allowed to come in contact with a species that doesn't want us to come in contact with them. So if there's something up there, they're going to put a stop to us coming in contact with us. And if they don't come in contact with us deliberately, we're never going to know that they exist. Oh boy. So your neighbor was one of them? Okay. All righty then. Well, that's all we got for tonight, because I do got to get the stuff together and throw it into the membership so that we have more information in the membership, because I want to make sure that we have updated values and everything to that effect. It showed me by grabbing my hand and he flew around in the sky. Okay. So you went for a trip with an alien. Did he give you a souvenir? Hey, I'm not going to put it past you. I believe it. I believe that you went somewhere, and they may have even left some crop circles in the yard when you flew off. It's a Peter Pan experience. The fact I've never been picked up off the ground and taken anywhere except jail. So you're a very special person to have them have collected you and taken you anywhere. Consider that a privilege. The brain can't tell the difference, almost like the Matrix. The brain either dreamed it or it happened. Well, the brain can only process information that it's been exposed to before. So that's a true fact. And if in the event that you're having dreams about being in a different place that doesn't make sense, and you probably were in that place at one point in time, whether you're aware of it or not, which also indicates that if you have dreams of leaving the planet, odds are you probably did. Feels like a real memory. Then it probably is. So I think that's all the time that we have, because I was supposed to wrap this up about 15 minutes, but I did want to entertain your polite request to discuss the moon after the top of the show. I really appreciate you coming to the show. Thank you for showing up, Dylan. And I really enjoy the enlightening information about, because this isn't the first time that I've heard about this information, so I'm not devaluing it at all. I've never experienced it, because I've never experienced it, I cannot verify it. And all news is going to declare it as not factual. But notice, after I read the information, I did not tell you that you were at any way, shape, or form wrong about this, because I understand that media has a way of hiding the truth from us. And the issue is that I'm more than positive a portion of the show probably isn't going to be found, and I'm not going to have anything to do with it, because certain stuff they just don't want us to know about. So you might be onto something, and I would definitely like to follow up on it, but I just don't know where to look to get that type of information. He said, sounds good. Hope we get more people regularly showing up. We had Quantum was coming until the other person that I blocked started acting ass, and then Quantum stopped coming, but then Quantum will come back, and then Jesse will come back, and eventually Usman and Bayside will come back, and when Max Opposer's not acting a fool on the show, so we'll see quite a few people coming back, and we're going to end up with a decent quantity of intellectual individuals having intellectual conversations. It's a work in progress. We have to get past the noise, and we have to get past the petty squabbles, and we have to focus on the facts that actually I can prove. And then we have to really start thinking about how we can better ourselves. And that's when people are going to start coming to understand, damn, this is where we need to be at. Once we reach that level, you start seeing more people here than I'm able to handle in the comment section. He said your position intake, uh, new information is truly enlightening. Well, I'm not the kind of individual to say that it's wrong just because I can't prove it. I'm not going to say that it's not right just because I haven't seen it. The fact is that there's so much about this world that I've never seen. There's so many things in this world that I've never experienced. And I cannot devalue your experience just because I haven't experienced it. I can't mock you. I can't make fun of you just because I didn't experience it. Just because it didn't happen to me doesn't mean it's not real. Okay? That's the truth. And as a result, the information that you're giving to me is backed by your experience. So I believe that it happened to you. I've never had it happen to me. But if 40 people came on the show and said it happened to them, then if something's wrong, then it ain't happening to me. But depending on what's happening to you while you're out there having whatever happened to you happen, I might not want to go through that. Because one of the things that we have to think about, our memory has a way of protecting us from trauma. So if things happen that we don't want to remember, we have gaps in our memory from trauma. And that's not something that people talk about. So at the end of the day, while I wonder if there's something different that I'm not getting took, at the same time, I'm also glad I'm not one of the ones that didn't get that got took, because whatever, if something bad happened, it didn't happen to me. But if something good happened, I missed out on it. But I would prefer to be out of the loop of the unknown than to be in the loop of torture and trauma. That's my observation on that. One day, oh yeah, they're gonna have a lot joining. Of course, it was a work in progress of life. Yeah, but your unique position for not seeing it is good, because on some strong level, you have a positive outlook on life, irregardless. Well, of course. Well, one of the reasons why I have that type of outlook is because I grew up in a different America than everybody else grew up in. I grew up in the America where you were guilty because you walked outside. You were guilty because you had a good tan. You were guilty because you were standing next to somebody else who had a good tan. Social stereotypes. So things happen to me that don't happen to a lot of people. And then I get negatively treated based on stereotypes. One of the reasons why I'm always in a suit. You can't compare me to the other people who behave a certain way because I don't even look like them. I don't dress like them. I don't communicate like them. You can't put me into that category of individuals. I don't respond the way they respond. And while I break those stereotypes, I still experience the stigma. People who don't experience that stigma don't know what it's like. That's a level of privilege that people who are privileged don't know what privilege feels like because they're privileged. But people who are deprived knows what privilege looks like because they don't experience that. So from that dynamic, I'm never going to have the outlook that if it doesn't happen to me, it's not possible that it'll happen. That's not altogether true. I mean, think about the Golden Dome of America. It is going to be millions of satellites in the sky so far up you can't see them with the naked eye, that is supposed to protect the United States from nukes and missiles being launched from the other side of the planet. You are never going to know that we're being shot at 3 to 5 times a week just to see if the missiles are still online. You don't know. But when we talk about something like that, people will say, oh, yeah, that's fake. No, we get shot at quite often. The MacDill Air Force Base deters missile launches that just so happen to not cause a world war. And we shoot them down on a regular basis. Whether it's a test that we volunteered for to make sure our equipment's working, or it's an attack that we deflect. Either way it goes, we do not know on a regular basis that loud bang that happened in the middle of the day probably was a missile being blown up at the level of an airplane. That turbulence that you had on your flight that on a clear blue sky probably was distortion from a missile being blown up nearby. We don't know. Half of us don't even look out the window while we're flying a plane because of the gremlins on the plane. The principle of the fact is the same. You cannot dismiss something just because you haven't seen it. And yes, exactly. We are lucky to be here one way or another. So I take it all in, and I observe it. I analyze it. If I can disprove it, I'll disprove it. But if I can't disprove it, I'm not going to discredit it. You know what I mean? So with that being said, I really appreciate you guys for coming to tonight's show. I really do got to run now. Thank you guys for coming to This and That. I'm your host, Sander, where we talk about this, that, and everything in between. And I'm going to see you guys tomorrow night.
Higher ground. Used to chase validation, now I validate myself. Building inner strength, putting doubt upon the shelf. No more unnecessary drama, no more wasted time. Climbing higher, constantly making my own climb. Standing on higher ground where excellence is found. My potential knows no bounds, raising the bar, breaking ground. My network is my net worth. Choose your company wise. Surround yourself with eagles, not with sheep in disguise. Every interaction is a reflection of my brand. Quality over quantity, that's my personal command. I'm not landing on higher ground where excellence is found. My potential knows no bounds, raising the bar, breaking ground. I'm not just living, I'm manifesting my vision, cutting through limitations with surgical precision. My expectations are my compass, my respect is my shield to mediocrity and chaos. I will never I'm not just living, I'm manifesting my vision, cutting through limitations with surgical precision. My expectations are my compass, my respect is my shield to mediocrity and chaos. I will never yield.